Hello and welcome to the chart review. As we usually do, we'll review the 6 daily charts for the markets that I follow most closely: S&P, Russell, NASDAQ, TLT, GLD, and GDX. And this week, as I was unable to record a video last week, I will review the changes over the last 2 weeks, given that we had some meaningful action. Let's begin with the S&P 500. So off the top, my preference was for the decline to ideally hold the August low, which was 51.19, in which case it would likely have made a higher high. And in the last video, which was recorded 2 weeks ago, I noted the 48, I think it was 48.18 as ultimate support for the decline to still have potential for another high. So as we now know, it bottomed at 48.35, so right in the ultimate support zone, and bounced. And the way I'm viewing it now is the bounce that we got was a high probability bounce. And those of you that follow my intraday work in the daily service know that I was positioned bullishly off of the lows. And now that part has completed. So what we have now is the bounce, as fast as it was, already retraced 50% of the decline of the top. And that would be my minimum expectation under not only the bullish scenario, but the bearish scenario as well. So at this point, we have a question mark. There is still potential that the April low that we got, 48.35, is the bottom of the correction. It went a little bit lower than ideal, but it was really more of a, not even a spike, it was a gap down overshoot. So potential for a move to this area, to a minor new high, does remain. And to make such potential likely, S&P needs to exceed this level over here, which is 57.86. So if it can exceed this bounce that failed and produced a lower low, then it will become likely that it will produce a new high. Until such time, consolidation into this lower red area, red zone, has potential to be topping a corrective bounce and then down from there. So as it already entered the red zone, potential for all of the bounce to have completed at 54.81 does exist. But so far, I don't have a clear indication that all of the bounce completed. So we could very well see a deeper pullback and then maybe a higher bounce into the upper portion of the first red zone and then down. So much yet remains to be seen. What I can say is that any further lows below 48.35, so below the low that currently exists, will substantially reduce the odds of new highs. So even a tiny bit lower will shift odds in favor of the rally off of the 2022 low to have completed. That is the picture in the S&P. Oh, and I should add, we talked about the upside zones. Should the low be broken, the next downside confluence will be over here. So that's 43.11, 43.33, so low 4,300. If we get bottoming into here, potential for some upside action, in which case we'll have to see what it's capable of producing out of here. But some upside action potential will exist. Below there, we have 37.16. And below that, we have the 2022 low, which is 34.91. That's basically the picture here. No conviction at this point that it will produce a higher high, even though potential for one remains. Okay, let's move on to Russell. Russell is in a more bearish stance. So it already retraced most of its rally. In its case, it's 2023 low. After completing what could be viewed as, for those of you that speak Elliott wave, an impulse up, it retraced vast majority of that rally. And the structure of the decline further increases the odds of downside to follow. The main question that I have in Russell is whether this was all of the immediate decline, in Elliott wave speak, an impulse down, in which case we should be seeing a higher bounce reaching the red area, resistance area. So that's the red resistance area is 1984 to 20, what is it? 2158. So this area. Or if it's not yet done with the immediate decline and it's going to do another extension lower to test the 2023 low, which is 1633. So as it stands now, I don't see it ready to stage a sustained break of 1633. So on the downside, bottoming into 1633 will have potential to produce a tradable bounce, but only a bounce at this point. Odds are against Russell having completed the entire correction, and it's a matter of how high the next bounce will go before further lows. So absolute earliest indication of anything more bullish will require a break of 2158. And at that time, we'll have to reevaluate in what stance it's proceeding higher. But on the downside, 1633, if it's seen before the red area is visited, will have potential to produce a meaningful bounce. So that's the picture in Russell. Now let's move on to NASDAQ. Okay, so NASDAQ is the stance here is much more similar to the S&P. And what we have here is a similar picture that it went somewhat lower than ideal support. That would have been this low over here, the August low, but it was really in a gap down, which swiftly recovered. So not yet a clear breakdown, and potential for a new high does remain. But to favor that potential, it would need to exceed 20,292. So that's this level over here. The red line was the green triangle. Uh, Same as is the case with the S&P 500, it already retraced in that 1 day wonder rally, retraced 50% of the entire decline. So a minimum bounce expectation has been met. And if any further lows are seen, even a little bit lower, odds will substantially diminish. Odds of a new high will substantially diminish. Imminent new high, I should say. So very similar stance here. Potential for a higher bounce, higher into the first red area does exist. And then depending on how that proceeds, that intra-week may provide clues as to how likely it is that this resistance will be broken. And those of you that follow my intra-week work will know it in real time. The rest of you will learn about it over the weekend. And that's basically the picture here. On the downside, the next support confluence, and here it's even more pronounced than in the S&P 500, will be 13,933 to 14,317. So that's this zone over here. And if that breaks, then 11,929. And if that breaks, then the 2022 low of 10,440. Okay, now moving on to TLT. So TLT staged the bounce here. Intra-week, we saw the topping pattern, went bearish, and it proceeded to test the January low without breaking the January low. So somewhat ambiguous, most bullishly, the low that we got in April was a slightly truncated bottom. But to even begin to consider that, I would want to see it above 90.51. So for as long as 90.51 is not exceeded, there's substantial risk of further downside. I guess in a more benign bearish scenario, this further downside will breach the January low, but maintain over the 2023 low, which is 82.42. So if it provides another extension here and then shows bottoming, there is potential for a bottom to form in that narrow zone. And then we'll want to see something constructive to develop out of there to begin to suspect that it's a bottom. But really, for a stronger indication, I will want to see the early April high of 94.09 to be exceeded. So if it can exceed this level, the red line was the first green triangle, then odds will be quite good that it will exceed the 2024 high. So heading into the red zone here. On the downside, as we just discussed, potential for bottoming does exist in a slightly lower low. If the 2023 low breaks, so this red line was the first red triangle, that will open up a path to much, much lower, so to this green box over here. And that path will become likely if it can continue below 78.58. So high risks remain here. Which of the two bearish scenarios, I'm not sure, but I'm still viewing it bearishly despite the bounce that we got, until and unless it can exceed 90.51. Moving on to gold, GLD. Not GDX yet. GLD. Okay. So in GLD, I was following a topping pattern into the early April high, and we got an abrupt pullback. However, it failed to break the support that it needed to break at 261 and change. And instead, it shot up higher. So my perspective is whenever I'm following a pattern, it's always a premise. And yes, it's an educated premise, and more often than not, it will be correct. But I'm always open to listening to the markets as to what price action is telling me, and whether price action is substantiating my perceived or preferred path. And if it doesn't, then we have to evaluate other potentials. So far, the decline that we had off of the early April high uh, occurred exactly where it needed to occur, but it failed to break support. And instead, it's doing another extension higher, which so far is remaining below the key resistance of 330. So now this is a show me zone, really. It went higher than ideal, but not yet to the point where a breakout is likely. So what else could be going on here if it's not topping? The most of the bullish potentials, the one that I see most probable is that this rally off of the November low is acceleration, and that the April low, in that case, the April low should hold all further pullbacks. So the 272.58 should hold. So the bullish path here would be that based on the smaller degree work that I do in the daily service, I do see the immediate rally off of the April low as nearing completion. So I do not see GLD just continuing extending directly past 330. So is that the most likely bullish path, should a bullish path unfold, would be for a pullback that goes below prior high of 292 and change, and enters the green support zone over here. And it may come close to testing 272, but failing to break it. And then from this zone, it would then extend to 328 to 365. So this red target zone over here. So really at this point, much remains to be seen in terms of price action. And if, depending on how we get into this green zone, I will refine my perspective on how likely it is that it has topped. Um, Naturally, if it goes through it in one fell swoop and breaks 272, which sometimes has happened, then that would be a strong indication of a top. But if it does some backing and filling into the support zone, then I will have to view this bullish path as the more likely path. So at this point, it's very much a show me time and stance. Okay, moving on to GDX. GDX is similar in terms of um, relative, well, in terms of action off of the top and failed reversal in April, it's similar to gold. In terms of its potential, it actually has a higher potential to the upside if the bullish scenario unfolds. So now let's look at the levels that matter and the potential paths. So the bearish scenario is that it's topping, and the tricky part about trading gold and GDX is that it's not uncommon for it to top without divergences. So naturally, looking at price action here, nothing here says a top, but it wouldn't be the first time that it reverses down without any such divergence. So I have to look at price first and foremost, and price that matters here, the price level that matters is 57.57. So for as long as that is not exceeded, it can still be viewed as topping. Now, what needs to happen for that top to become likely? Absolute earliest indication would require reversal below the prior high, which is 46.94. So reversing below this red line with the red triangle would be the earliest indication. A stronger indication would require reversal below the April low. So that's 40.26. And confirmation of a lasting top would require reversal below 33.42. So a long way from here. Now, on the upside, if GDX is able to maintain over the April low, 40.26, and ideally maintain over 46.94 and proceed over 57.57, that would favor a path to this red zone and ultimately higher. So also very much a show me zone. It went higher than ideal, and this, has to be viewed, if it's viewed on its own merits. This is not a topping stance. It has not yet breached key resistance, so potential for reversal does exist, but it would have to be an abrupt reversal to confirm the bearish potential here. So that's basically where that stands. And that concludes the video, the chart review for today. Thank you for watching.